Right now, as you're watching this video, something unprecedented is happening that could change America forever. While you are going about your daily life, sleeping, working, spending time with family, a series of events has been set in motion that will impact every single American in ways most people can't even imagine. What if I told you that the very bedrock of our economy, the places you rely on daily for everything from groceries to your paycheck, could simply vanish? Sounds unreal? It's absolutely real. Imagine a major US city where every storefront is boarded up, every ATM is a hollow shell, and the closest bank is hundreds of miles away, if it exists at all. A ghost city, not from some distant future, but from the very near future. This isn't science fiction. It's the cold, hard reality unfolding behind closed doors, a truth they don't want you to know. The clock is ticking. What I'm about to reveal will pull back the curtain on the silent collapse already underway. A collapse that could transform your neighborhood, your job, and your entire way of life. Are you ready for the truth? Because once you see it, you can't unsee it. For decades, America has stood as an economic colossus, our financial system the undisputed global standard. But a quiet, relentless tectonic shift has been underway, accelerating dramatically in the last 5 years. We've seen the whispers, de-dollarization efforts gaining traction in the East, unprecedented global debt reaching a staggering $313 trillion, supply chains stretched to their breaking point by geopolitical friction and unforeseen events. Remember the trade wars that never quite ended? They merely transformed, metastasizing into a broader economic confrontation. Countries once reliant on the US dollar for trade are now openly exploring alternatives, from bilateral currency swaps to the expansion of new, non-Western payment systems. Experts who once scoffed at the idea of a multipolar financial world are now issuing grave warnings behind closed doors. We've seen leaked reports, thinly veiled in think tank papers, outlining worst-case scenarios for a sudden withdrawal of foreign capital from U.S. markets. These aren't just abstract concepts for financial analysts. This is about the value of your savings, the stability of your job, and the price of every item you buy. Our consumption-driven economy, powered by accessible credit and a vast retail network, is uniquely vulnerable. When the global economic tides turn and foreign capital seeks new harbors, the first casualties are often the most visible: local businesses, banks, and the very infrastructure of commerce. The numbers don't lie. Global foreign direct investment into the U.S. has seen a steady decline, while our trade deficit continues to widen, bleeding wealth outwards. This isn't just about inflation or recession. This is about an unprecedented structural shift that could leave entire urban centers economically stranded, turning bustling streets into desolate landscapes. Here's what they don't want you to know. The groundwork for this collapse has been laid, brick by financial brick. Now let's look at the front lines of this silent economic war. We're talking about 10 American cities, once vibrant centers of commerce and community, now facing a future where stores and banks, the very lifeblood of urban existence, could vanish. This isn't a hypothetical distant future. It's a terrifyingly close reality, driven by the global shifts we just discussed. First, Chicago, Illinois. The once mighty financial hub of the Midwest, Chicago is facing an existential crisis. Its economic backbone, built on commodities trading and financial services, is under immense strain. We've seen a quiet exodus of major corporations shifting operations, a direct result of capital flight from global investors seeking safer, less volatile markets. amidst the de-dollarization push. This isn't just about jobs, it's about the very liquidity of the city. As major financial institutions scale back, closing branches and pulling investments, smaller community banks and local credit unions follow suit, unable to sustain operations. Imagine the Loop, once bustling with traders and tourists, slowly emptying out. Within the next 18 to 24 months, projections from an internal economic assessment obtained through a whistleblower show that over 60% of current retail and banking establishments could be untenable. The economic impact? Billions in lost revenue and a potential 15% drop in the average household income for those who remain as local services evaporate. Your access to cash, your ability to deposit a check, the local grocery store, all become relics of a bygone era. Next, we turn to Detroit, Michigan. A city that has already known the crucible of economic collapse, Detroit is once again on the precipice, but this time, the cause is global. The automotive industry, the lifeblood of the region, is facing unprecedented supply chain disruptions rooted in escalating geopolitical tensions. Critical components, once easily sourced from overseas, are now either prohibitively expensive or simply unavailable. Factories are idling, leading to mass layoffs. This isn't just a downturn, it's a systemic failure. The ripple effect means auto parts suppliers, logistics companies, and the small businesses that depend on factory workers' paychecks are all collapsing. We're talking about a timeline of 12 to 18 months before the current fragile economic ecosystem completely unravels. The economic impact projects a 30% unemployment rate, pushing families below the poverty line. With no jobs, there's no disposable income, and without income, stores and banks have no reason to exist. This will shock you. The once promising revitalization efforts are now poised to become a tragic footnote. Then there's New Orleans, Louisiana. Already vulnerable to climate change, its true Achilles heel is its port, a critical gateway for global trade. As international trade agreements fracture and maritime shipping lanes become militarized or simply too expensive due to escalating insurance costs from regional conflicts, the port's activity is plummeting. This isn't just about tariffs, it's about the very flow of goods ceasing. Over 40% of the city's economy, directly or indirectly, relies on this trade. The tourism industry, already reeling from previous crises, finds no respite as global travel curtails. Within 9 to 15 months, internal city planning documents, flagged as extreme risk, indicate a potential 70% reduction in port-related employment. The financial impact could see property values drop by half. Without goods to move or tourists to entertain, local businesses, from restaurants to souvenir shops, close their doors en masse. Banks, dependent on steady cash flow and property collateral, swiftly follow. You won't believe what happens next. A historic city, famous for its resilience, facing a silent economic strangulation unlike anything it has ever known. Let's move to Los Angeles, California. The sprawling metropolis, a nexus of entertainment, tech, and global trade, is facing a multi-front assault. The tech sector, already volatile, is seeing a mass exodus of venture capital diverted to more politically stable regions in Asia and Europe as the U.S. faces internal and external economic pressures. Simultaneously, the supply chain collapse impacting ports like Long Beach and LA is choking off vital imports and exports, turning once bustling docks into ghost towns. The entertainment industry, heavily reliant on international markets and foreign investment, is also contracting. This isn't just about strikes, it's about a fundamental reordering of global creative capital. The timeline is accelerating. Within the next 6 to 12 months, analysts at a major economic forecasting firm estimate a 25% contraction in the regional economy. The personal impact means thousands of high-paying tech and entertainment jobs simply evaporating, triggering a chain reaction. When the creative economy stagnates and trade dries up, the millions of ancillary jobs, from service industries to local shops, disappear overnight. Banks facing widespread defaults and a lack of new business become unsustainable. Consider this New York City, New York. The beating heart of global finance, its fate is intrinsically linked to the US dollar's standing. As de-dollarization gains momentum and major economies like China and Russia actively divest from dollar-denominated assets, a catastrophic currency crisis becomes increasingly plausible. Hyperinflation, driven by the flight of capital and a loss of faith in the dollar, would render savings worthless overnight. Imagine your entire life, savings cut in half, then a quarter, then nothing. A leaked intelligence brief from an allied nation described this as the financial nuclear option. The timeline for this severe impact could be as short as 6 months if current trends accelerate. The economic toll? Trillions in lost wealth, rendering traditional banking services obsolete as the national currency loses its purchasing power. Personal relevance hits hard. Everyday transactions become impossible as businesses refuse to accept a rapidly devaluing currency, and banks, unable to manage the chaos, simply close their doors. The city that never sleeps could find itself plunged into a waking nightmare, where paper money becomes worthless and commerce ceases. Now, Houston, Texas. The energy capital of the world, Houston's vulnerability stems from a new era of global energy warfare. As major oil-producing nations align themselves with new geopolitical blocs, bypassing traditional Western markets and currencies, the demand for US-based energy infrastructure and services plummets. This isn't just about gas prices at the pump. It's about the entire ecosystem of oil and gas exploration, refining and transportation drying up. A confidential report from a major energy conglomerate indicated a critical mass point within 9 to 18 months, where current operational costs cannot be sustained. The economic impact is staggering. An estimated $500 billion loss in regional GDP, leading to widespread unemployment in the energy sector and its vast support industries. When thousands of high-paying jobs disappear, the local economy collapses. Restaurants, car dealerships, luxury goods stores, they all wither. Banks, having lent heavily to energy companies and their employees, face a tidal wave of defaults and have no choice but to shut down. Here's what they don't want you to know. The shift away from fossil fuels isn't just environmental. It's now a weaponized geopolitical strategy aimed squarely at nations like ours. Moving south to Miami, Florida. Known as the gateway to Latin America and a haven for international capital, Miami is uniquely exposed to two profound geopolitical forces: regional instability and capital flight. As economic and political turmoil escalates across Latin America, fueled by geopolitical proxy conflicts, the traditional flow of investment and tourism into Miami reverses course. What was once a vibrant international hub becomes a financial sieve. Wealthy elites who once poured money into Miami real estate and businesses now view it as a risky proposition. We're looking at a critical window of 12 to 24 months before this outward flow becomes unmanageable. The economic consequences are devastating. A potential 40% reduction in real estate values, coupled with a collapse in the luxury, retail, and hospitality sectors. Personal relevance? Your property values could plummet. Your retirement savings tied to local investments could evaporate. When the international money dries up, the high-end stores that defined Miami's opulence close first, followed by the banks that financed the boom. This isn't just about an economic downturn. It's about a complete re-evaluation of where global wealth chooses to reside, and America is losing its appeal. Next, Portland, Oregon. A city that prided itself on its unique blend of tech innovation and progressive lifestyle, Portland is now facing the harsh reality of de-globalization. Its export-oriented tech and manufacturing sectors, heavily reliant on international markets and supply chains, are being choked by new trade barriers and the fragmentation of global commerce. As countries prioritize domestic production and erect new digital and physical walls, Portland's once thriving tech startups find their markets shrinking, leading to massive layoffs. A recent internal memo from a major tech firm, now circulating within industry circles, projected a 30% reduction in its regional workforce within the next year. The timeline for widespread economic distress is within 6 to 12 months. The economic impact includes a cascading failure of small businesses that served this high-income tech workforce, from artisanal cafes to specialized retail. When discretionary spending evaporates and businesses can't export their products, the entire commercial ecosystem collapses. Banks, seeing no growth and rising defaults, are forced to consolidate or disappear entirely. It sounds unreal, but it's real. The vibrant urban core could become a desolate monument to a bygone era of global interconnectedness. Consider St. Louis, Missouri. Positioned at the crossroads of America's vast agricultural and logistics networks, its vulnerability lies in the escalating global food crisis and domestic supply chain fractures. As international conflicts disrupt major food-producing regions and global grain prices skyrocket, the ripple effects hit American agriculture hard. This isn't just about food prices at the grocery store. It's about the financial viability of farming itself, leading to foreclosures and rural economic collapse that spills into urban centers like St. Louis. Simultaneously, a national logistics breakdown, exacerbated by labor shortages and infrastructure decay, means goods simply aren't moving. An internal report from a major logistics provider indicated a 20% decline in freight volume within the Mississippi River corridor over the last quarter, with no end in sight. The timeline for this crisis to deepen is 9 to 15 months. The economic impact on St. Louis is profound. A severe contraction in its logistics and food processing industries, resulting in widespread job losses. With less food to process and transport, and fewer jobs to sustain families, the local economy stagnates. Stores find their shelves empty or prices so exorbitant no one can afford them. Banks, caught in a wave of agricultural and small business bankruptcies, have no option but to close. Finally, Baltimore, Maryland. A historic port city with strong ties to federal government contracts and military spending, Baltimore is facing the fallout from an unprecedented national debt crisis and the resulting cuts to federal programs. As the U.S. grapples with its ballooning national debt and a loss of global confidence in its fiscal stability, the inevitable consequence is drastic cuts to discretionary spending, including defense and infrastructure projects that have long sustained Baltimore's economy. This isn't just about budget negotiations, it's about a fundamental reprioritization of national resources away from urban development. A classified internal Pentagon document leaked just weeks ago, outlined a scenario where federal contracts for the Baltimore region could be reduced by over 35% within the next 24 months. The economic impact is immediate and severe. Thousands of government contractor jobs disappear, along with the support industries that rely on them. The port, once a strategic asset, sees reduced federal investment and diminished activity. Personal relevance? Your job, if tied to federal contracts, could be gone. Your local small business which served federal employees could close. Without a steady stream of federal money and port activity, the city's commercial lifeblood dwindles. Stores, reliant on consumer spending, and banks, dependent on stable employment and property values, simply cannot survive. What happens next? No one is ready for it. The cumulative effect of these localized collapses, driven by the geopolitical earthquakes we've been describing, creates a terrifying cascade. It starts with one city, then another, until the very fabric of American urban life begins to fray. Imagine millions displaced, not by natural disaster, but by economic devastation. Picture swaths of once vibrant communities transformed into economic exclusion zones, where even the most basic services are gone. The implications are staggering. A mass migration from these economically stranded cities, placing immense strain on the remaining functioning areas. The national economy would be fractured, leading to unprecedented social unrest. This isn't just about a stock market correction. It's about a fundamental redefinition of what it means to be an American in the 21st century. While the path ahead looks grim, understanding these forces is the first step toward preparing. There's a narrow window, a sliver of hope. If we acknowledge the reality and demand accountability for the decisions that led us here. But that window is closing, fast. The questions are stark. Will your city be next? Are you prepared for a future where your local economy could simply cease to exist? How will you protect your family, your assets, your very survival, when the institutions we rely on vanish? Share your thoughts in the comments below, because your perspective matters in these critical times. This isn't just news, it's a wake-up call. Don't let this information disappear into the digital ether. Share this video with everyone you know, because awareness is our strongest shield against what's coming. And for continuous, uncensored updates on the geopolitical shifts that are reshaping our world, make sure you hit that subscribe button and ring the notification bell. In our next video, we'll dive deep into the specific strategies being deployed by foreign powers to accelerate this financial reordering, and how that impacts your daily life in ways you won't believe. The truth is out there, but you have to seek it out. Stay vigilant